You may have heard people in the real estate market talking about the lock-in effect and how it's been exacerbating the home shortage and keeping home prices high. Let's break down what that means. During the pandemic and subsequent housing boom, homebuyers secured amazing mortgage rates when they bought homes. We're talking 2-3%, which is really low. Essentially, in that time, money was almost free to borrow from banks in order to buy a house. But now, as the rates have risen, a new trend is emerging. Homeowners are rightfully hanging on to those mortgages and refusing to sell their properties that they got for rock bottom interest rates. And this is a trend that's nationwide. Think about it. If you've got a mortgage below 5%, why would you sell your home and then go buy a home at a 6, 7, maybe even 8% interest rate? This has essentially caused people who might consider moving or selling to be kind of locked into their home. And it's really not good for housing inventory. It means fewer houses hitting the market and a supply shortage. So what does this mean for you? Well, with limited inventory and high demand still for homes, prices are going to be staying where they're at or even climbing slightly. So is it a good time to buy? Well, the lock-in effect would suggest, yeah, it's still a good investment. Despite the shifting mortgage rates, the market is far from crashing. And once those interest rates do subside a little bit, typically that causes home prices to go up further. So we could see a situation where rates subside a little bit, but now all these people that were locked in are going to consider, I might move up my house. Maybe I'll sell now. And that's going to create more competition, even though the rates are lower. So that's something to consider in the future. Everyone's situation is different and unique. And if you'd like consultation on what might be the best move for you, feel free to shoot me a DM. Happy to help.